Welcome back to Mike in a Minute. I'm joined today with Mike Piershale, president of Piershale Financial Group, to discuss some tax filing tips to consider over the coming months. Mike, over the next few months, as tax filing season begins, what are some wealth management tips that you would relay to consumers if they receive a very large refund?
Hi, Karen. Karen, the first thing to remember, anytime you get a large tax refund, that means either you or your accountant very likely did a big miscalculation and frankly had you hold out too much tax, which remember is a tax-free loan, or I'm sorry, an interest-free loan to the IRS. So it's always better not to have a tax refund as far as we're concerned, because you're just tying up your money with no interest by leaving it in the hands of the government. But if you do get a tax refund, the first thing we recommend is to use it to pay down credit card debt if you have any. This type of debt is particularly bad simply because not only is the interest rate outrageous, often 18 or 20%, but it's also not tax deductible. Paying this kind of debt down can be a huge step forward in terms of bettering your finances. Second, we recommend putting a tax refund, if we assume there's none of this credit card debt, in some type of a tax sheltered account that's a good blend of stocks and bonds like an IRA. And finally, the third place we recommend using such a large refund, if the client is so inclined, is just to have a good time, or maybe buy that major ticket item you've always wanted to buy, whether it's maybe an automobile or go on a cruise with your family or some other thing that's just fun, but make sure those first two bases are covered first.